Good morning and welcome to TAB Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to TAB Capital's The Investors Lounge weekly podcast. Today's date is the 17th of November. Let's dive into the week's top market news. European markets retreat as central banks signal steady rates. The Pan-European Stocks Europe 600 index last week dropped by 1.24% in local currency terms, pressured by persistent worries about overvaluation in artificial intelligence stocks. Major equity benchmarks across the continent saw declines, with Italy's FTSE MIB slipping 0.60%, Germany's DAX falling 1.62%, France's CAC 40 losing 2.10%, and the UK's FTSE 100 easing by 0.36%. The Bank of England opted to keep its main policy rate unchanged at 4.0%, a decision backed by a narrow 5-4 vote within the Monetary Policy Committee. Governor Andrew Bailey's comments after the meeting reinforced expectations for a rate cut in December, indicating that current market forecasts for a terminal rate of around 3.5% over the next 3 years accurately reflect his present outlook. Central banks in Sweden and Norway maintained their current interest rates, as markets anticipated. Sweden's Riksbank held steady at 1.75%, with Governor Erik Thedéen suggesting the rate would likely remain unchanged for the foreseeable future. Norges Bank in Norway kept its rate at 4.0% due to persistently high inflation, with Governor Ida Wolden Bash cautioning that an easing cycle is not imminent. Eurozone retail sales continued to contract in September, slipping 0.1% from the previous month for a third straight decline and falling short of analyst expectations for a 0.3% rise. Year-over-year growth slowed to 1.0% from 1.6% in August. Germany's latest industrial data showed some improvement with a 1.3% monthly increase in output for September. Although this came in below consensus estimates, the country's economy ministry described manufacturing activity as still weak. On a seasonally and calendar-adjusted basis, industrial orders in September rose 1.1% compared to August. However, orders in the third quarter were 3.0% lower than the previous 3 months. Now our insight into alternative markets. European private equity set for growth and transformation in 2025. According to the European Private Equity Outlook for 2025 published by Roland Berger, the market is preparing for a significant acceleration in mergers and acquisitions M&A activity thanks to more favorable financing conditions compared to previous years. This optimistic outlook reflects the expectations of many industry experts, who foresee an increased investment pipeline especially in the Nordic countries and the Iberian Peninsula, where market dynamics are showing stronger signs of recovery. The report highlights a strong interest in add-on acquisitions, which are transactions aimed at integrating and strengthening existing portfolio companies, alongside an increased focus on improving operational efficiency. Value creation strategies will concentrate on optimizing costs, working capital, capital expenditures, and resilience to economic cycles. This indicates that private equity funds are aiming not only for dimensional expansion of companies, but also for qualitative enhancement of their operational management. Another key trend identified is the growing appeal of infrastructure investments, with particular emphasis on renewable energy and waste valorization. These sectors offer opportunities not only related to environmental sustainability, but also provide stable cash flows, downside risk protection, and medium to long-term visibility. These characteristics make them particularly attractive for private equity strategies seeking a balance between return and risk. Geographically, Northern Europe is showing a more gradual but steady recovery, while the Iberian Peninsula, Spain and Portugal is entering a dynamic evolution phase driven by investment and divestment needs. Here, the availability of capital, dry powder, and a younger, more risk-oriented generation of entrepreneurs are factors fueling a dynamic market with a significant deal pipeline. Finally, within the overall context, the European private equity market remains balanced between optimism and challenges. Despite the slowdown in recent years and some macroeconomic and geopolitical difficulties, most operators expect an increase in transaction volume and value in 2025, thanks to a more accessible financing environment and the rising quality of target companies. In this scenario, the ability to create value through digitalization, add-on acquisitions, and commercial improvement will be central to the success of private equity deals. In summary, Roland Berger's 2025 outlook paints a European private equity market that, despite regional differences, is poised for a year of growth and transformation with a particular focus on operational efficiency, sustainable infrastructure, and consolidation strategies. These elements will be the main drivers of recovery and value creation in the sector.
Thank you for listening to this episode of TIAB Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about TIAB Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the TIAB Capital team.